for those who are watching live, watching on the replay, we have a group called the No Agent Left Behind Mastermind Group, Real Estate Reinvention. And we do a mastermind call every Monday at 10 a.m. Broker agnostic, anybody from any brokerage can join us. Twice a month, we have guests. Twice a month, we just kind of round robin mastermind. We've had some great guests so far since we started this. I'm with my friend Eric Larkin, who's
Good morning,
in
everybody.
Our other compadre, Aimee Burroughs, is doing Halloween at school today. And I'm hoping Ramsey Stewart will jump on, but you get at least two of us every week. And we talk all things real estate that are relevant. We may have met through Clubhouse. I do a Clubhouse room Tuesdays and Thursdays typically, called Coffee and Real Estate. You can jump on at 8 a.m. You don't need to have makeup or hair done, which I love that about Clubhouse. And this group is all about masterminding, sharing ideas. You know, if you have questions about what you want to do in your business, we try to talk about a lot of different things. And so, you know, if you have something, drop it in the Facebook group, because we won't be able to see it. Well, we might be able to see it here in the chat. Actually,
yeah, if you drop it on the chat, I'll bring it up.
Okay, and then I'll be looking at the Facebook group. So today we thought it would be super timely to talk about mortgages. And I feel like Halloween's the perfect time because everybody's in a fearful mode in our industry. I think we need to reclaim ourselves and go, opportunities are around us in any market. For newer agents that have never experienced a dip, this is very normal where we have dips in the market. We have changes through the economy. Different things happen. Natural disasters happen, like in Naples and Fort Myers. Parts of those areas are going to be very impacted because of what happened with Hurricane Ian. And we have to think ahead and how to help our buyers and our sellers, right? So Frank Christiano is with CrossCountry Mortgage, and he's going to be sharing with us a temperature of the market, what's going on with the Fed rates, how to be creative. And CrossCountry is a very creative outfit. And off and running we go, Frank. I'm just going to let you introduce yourself. We're very casual here. And yes, occasionally people will swear. So if you don't like that, I'm sorry ahead of time.
Well, listen, first and foremost, couple things. Michele, as always, thank you so much for allowing me to speak in front of your amazing audience. And as far as the swearing goes, I mean, I hear it all day. I mean, I'm in the mortgage business and I have two kids, so
right?
and they both play sports. So believe me when I tell you, swearing is not something that I'm new to. So can everyone hear me okay? If not, please just let me know. I do apologize for the video. For whatever reason, I was having some trouble getting on this morning, but nonetheless, here we are today, right? So, Michele, you bring up a very good point. I mean, it's you know, in light of Halloween, which is always fun for everyone, right? Of all ages, children, adults, even in the office here, we've got some people that dressed up, which is cool. It's clearly a fearful time, right? I mean, I think that what's happening is everyone can get easily caught up in what's going on in terms of the market, right? So about 6 to 8 weeks ago, we started seeing a tremendous increase in interest rates. And, you know, like everything else in life, unfortunately, it happens very quick. Like, we weren't given any real notice. It wasn't like, hey, by the way, you know, it's April, and in June, July, and August, you're going to slowly start to see a slight uptick in interest rates, right? It just happened. I mean, for at least for the majority of us, right? It happened relatively quickly. Like, we had no idea this was coming, right? I mean, we not that we didn't have any idea. I mean, we knew that the market couldn't remain where it was forever because those rates were very, very low. And a lot of it had to do with, unfortunately, you know, there was a pandemic, right? Rates came down. and people took advantage, whether it be through buying, selling and buying, upgrading a house, maybe refinancing. And even myself, I mean, I was able to purchase in July of 2019, and then I turned around, I mean, not even 8 months later, and I was able to refinance it. And my rate has never been this low, right? And I've owned many homes. So where am I getting at, right? To most of us who have been in the mortgage or real estate industry if we've owned homes in the past, 6s and 7s really isn't the end of the world in terms of an interest rate. Like I bought my first house back in 2004, and I remember I got a rate of 6.99. It was interest only. It was a 5-year ARM, but at the time I was ecstatic. I mean, people were like, wow, to buy a house with as little down as I did and to get a rate at 6.99, I was very happy, and I was told, hey, listen, you did the right thing. You got a great deal, right? I see Eric, our rate was 6 3/8. Yep. So for us, I mean, look, it's 6s and 7s isn't enough to scare us away from buying a home, right? I think really where we're going to see the majority of the population kind of take a step back and say, well, I'm going to, either wait, or I'm going to see where the market goes, the millennials, right? And not to pick on the younger people, right? Because we love them, but they seem to think that rates in the 2s and 3s and 4s, that was supposed to continue forever. And if you're buying a home, if you're owning real estate, you shouldn't be paying a rate in the 6s or the 7s, right? Now, granted, if there were any more rate hikes, in the 8s and 9s, I mean, then yes, I do agree at that point. Maybe it's a little scary, but I mean, if we hover around the 6s and 7s, and there's been some speculation that after the midterms and the end of the first quarter, there could be some pullback. We could see some high 5s, maybe even low 5s. I mean, I heard a gentleman named Barry Habib speak, and you can Google him. It's Barry, and his last name is Habib. It's Habib. Thank you, Michele. He is fantastic. I've listened to him quite a few times, and he even said, he might see rates in the high 4s by the end of the first quarter, right? So where am I getting at, right? Do I think it's a good time to buy a house? Absolutely. And why do I say that? Well, you just want people to buy houses so you can make money. Well, of course. But with that being said, let's remember one thing. Someone said to me a couple of days ago, hey, I'm thinking about waiting until the market pulls back and rates go back into the high 4s and 5s. And what do you think? And I said, well, quite honestly, I'm going to give you my honest opinion, right? Have you ever stepped on an ant pile? And he said to me, what do you mean by that? I said, when you step on an ant pile, thousands of ants, come out of it, right? If the market pulls back and we end up back into the high 4s and low 5s, well, don't you think there's going to be thousands of other people who have the same mindset that you do and are thinking the ssame thing? They're going to jump back into the market with you. So what does that do? Well, now you're competing for that same house, but you're competing with now 15 other buyers that are doing the same thing you are. So my advice to anyone who wants to wait, I'm not saying there could be a scenario where maybe somebody should wait. I'm not saying everybody should be buying right now. Everybody's scenarios are different. However, with that being said, me personally, if I'm in the market to buy, I'd rather buy where there's less competition. There's the ability to close in 20 or 30 days, and I'd have to do a 10-day closing and no inspection and waiving appraisal and all that other crazy stuff that was going on, right? You can close a normal purchase real estate transaction 20 or 30 or 45 days. You can do your inspection. You can do your appraisal. You can actually negotiate a price. Sellers are now giving seller concessions because the market is a little different than it was a couple of months ago, right? So with that being said, buy now. Let's leverage where the market is. If the house is on the market 3, 4, 5, 6 weeks, let's ask for a seller concession, right? Let's find out. What is your net bottom line? Michele may say, well, you know what? My house is on the market for $750. My sellers will not go above it will not go below $725. Great. So now we know $725 is our net bottom line. Well, let's go back to $740. Let's take $15,000. Let's buy a rate down to high 5s or low 6s, right? Now we've got a more affordable rate and payment, right? And at that point, when the market does eventually correct, we can refinance it, right? Because at least then, right, you're not having to compete with 15 other buyers if the market does drop and rates go back into the high fours. Does that make sense? Right? So regarding the seller credits, now, Michele, the seller credits are huge, huge. Here's what I'm seeing more of, right? I'm seeing more people who I will tell you, right? And I'm not just, I'm not saying this. There are still people in the market to buy. Make no mistake about it. There are people who are actively shopping to purchase a home, right? If you find that house that you absolutely love, but that payment's a little bit higher than you wanted to, where your level of comfort is, right? If we know, like I said, if we know what that seller's net bottom line is, and we think the property will appraise, because we are seeing appraisals still coming in relatively close to where the contract price is, right? If we know that the property can appraise, and we know that seller's net bottom line is a little less than what it's currently listed for, let's take that difference. Let's leverage that, buy down the rate, right? We have a program right now where you can do, it's called a 3-2-1 buy down. 3% less the first year, 2% less the second year, 1% less the third year. So, for example, if rates today are at 7 and we do a 3-2-1 buy down, the seller has to pay that. The buyer cannot pay it. Fannie Mae, Freddie Mac will not allow it. So if the seller is willing to give you $20,000 back on a sale price of $750 because they want $730, right? Now we take that $20,000, we simply shift that money to the buy down. So now year 1, your rate's 4%. Year 2, your rate's 5%. Year 3, your rate's 6%. And then from year 4 through the remainder of that term, it's back to 7%. Well, somebody may say, well, where does that, what's that going to do for me? It only buys me time. Well, I know for myself, my kids are a little younger, but let's just say I had kids that were in private school or college, and I know they're coming off the payroll in a couple of years, right? Well, if I'm 4% the first year, well, that helps me. 5 the second. Well, then by year 4, if I'm back to 7%, well, I may have just lost X amount of monthly expenses that came off my payroll. So it may not be the worst thing in the world being at 7%. And in addition to that, there still may be an opportunity in that time period between year 1 and year 4 to where you can refinance it, right? So there's a lot of different things you can do. But if you wait, again, I use the ant pile analogy, you're just waiting. And then if the market does, if rates do pull back and we end up in the high 4s or low 5s, well, that's great. Well, now there's just that many more people that are in the market competing for that same house that you are. Does that make sense, Michele? You're on mute.
Absolutely. That's
So
fantastic.
So I think that's the big thing, right? I think if you're a listing agent, right, we have a couple things that we can do. Number one, we can do a pre-appraisal. And basically what that's going to do is it's going to allow you to determine what that value is prior to the property going on the market. So that way you can say, Mr. Seller, I'm your listing agent. Your property appraised at $600,000. Now, after a couple of days or a couple of weeks, if we're not seeing any activity and Mr. and Mrs. Seller say, look, we have it on the market for 6, it's worth 6. We'll take our net bottom line is, I don't know, fake number, 570, 575. We just want to sell this house, right? Well, maybe we drop it to 590. We get a full price at 590. And then, we can credit back that difference there to buy the rate down. And we have specific language that you can put in your listing description that will say, and I can email this to everyone, Michele, this particular property qualifies for a seller credit of X dollar amount. And then we can market the 3-2-1 buy down, because the thing is this, right? We've got to be able to entice these buyers, right? We've got to be able to, entice them is really what it is into making an offer. Because if they just, if we don't do that, houses remain on the market, buyers just kind of poke around, but don't make any, they don't make offers, and the market just remains completely stagnant. So I think that's a good one. I'd like to send the team, right, whoever's on the call, the pre-appraisal marketing flyer, the 3-2-1 marketing flyer. We've got a 2-1 where it's 2% less the first year, 1% less the second year, and then whatever that rate would be, from year 3 on. Definitely some different things that we can do in terms of getting the buyer engaged and getting them, to understand that there is a way they can purchase this house and keep that payment at an affordable number.
So
Hey,
we have a
Frank,
question.
Terry's got a question. Sorry
Sure.
about that.
Go ahead, Tara.
Hey, Frank. So if you do the pre-appraisal, the new buyer can't use that appraisal, correct? Or if it's FHA, they can?
So that's the thing. So the buyer would be able to, as long as, so if we do that appraisal, yes, they can use it. If they use a different lender, unfortunately, they wouldn't be able to use it.
That's a great question. Anyone else have questions for Frank? Hey, Matt. Hey, Ramsey, Knifey.
What's going on?
Hi.
What's up, Matt?
What's up?
How are you, sir?
I'm doing good. Frank, how you doing?
Good. I like the office, man. You have any questions for me? And I think that the main thing, like I keep going back to, is that we've got to be able to educate, and it's up to me as well, right? It's up to the agent and the lender to educate the seller and the buyer that, hey, look, let's just get let's get some dialogue going. Let's find out what the seller is cool with accepting. And then at that point, is there enough money built into that credit to where we can get that rate to an affordable payment for the buyer, right? We're going to have to be on our A game, all of us across the board, in terms of being able to sell and educate and really convince buyers and sellers that, hey, this is not the market it was during COVID. It's gone, and it's probably never coming back, quite honestly. And the only reason rates dropped that low and the market was where it was because when you got rates in the 2s and on a 15-year, under 2, by default, you're going to get a tremendous amount of activity. I don't care where you are.
Yeah, I think for the realtors on here, I think right now is a huge opportunity for agents to be running educational classes in their local markets, either if they're live or going live on Facebook or LinkedIn, just like you would do home buying seminars back in the day. I think partnering up with a lender and getting that done is super good tech.
Absolutely. And I think a lot of them, they're not doing that, right? There are a lot of agents, I hate to say it, that are just like, well, the market's quiet, so I'm just going to kind of sit tight until things pick up again. Well, I mean, if you don't create your own market, when it does eventually come full circle, the ones that are creating a market, the Michelles, the Erics, the people on the call here, right, that want to learn more, they're going to be the ones that are going to benefit, not the people just sitting back and waiting for things to, come full circle to where they were the last 24 months. Because that, in my opinion, is probably not going to happen anytime soon.
Yeah, I agree with you. I'm a big fan and advocate of creating your own listing inventory. I'm a niche witch, as you know, and so I focus on those niches that are not as hard hit by a recession or the economy or world events or whatever. Life niches, probate, seniors, divorce, they roll through any economy. Going the road a little less traveled, being in control of the market. So if you've been a heavy buyer's agent, trust me when I tell you, I've been there. And in 2012, I made a conscious decision to be a listing agent and attract my, buyers to my listings, right? I still work with buyers by referral, but that is not my stream, right? But it still allows me to have a finger on the pulse, work with Frank, stay in touch with what's going on so we can educate our sellers so that the expectation is set and the fear for the seller is not there. Sharon, I'm going to say this so wrong. Shiratzi. I'm totally killing it.
I think we all butcher his name,
Butchered his name.
but we know who Sharon is. Yeah.
Sharon, follow him on Instagram. He was a speaker at our One Real conference, and he said the biggest thing is, making sure that you take the fear away from the seller. What's next for the seller? So you keep them in the what's next so that they know what's going on. So there's no awkward conversations about why their house is on the market for as long as it's on the market. You've got to go in and set those expectations that, listen, these things are going to happen right now. This is more of a normalizing market. And this is how we're going to leverage someone who is, financing. That may mean, and correct me if I'm wrong, Frank, that we have to educate a buyer's agent and say, hey, listen, if this is what your lender's doing, is your lender thinking outside the box like Frank? Do they have these programs? You want to get the deal done for your seller highest and best, but also with the least amount of stress. And
Yeah,
there are agents that have no clue on what to do right now.
Yeah, I mean, I would say where I first saw this was picking up steam was about 2 months ago. My neighbor in Boca here, she's also an agent. She referred a buyer to me. He was coming down from Wyoming and he was looking at houses in Wellington. So he was looking anywhere between somewhere in the nines, like $1.1 million. He said he would go to $1.1 million would be the top end of his budget. So he ends up finding a house for $1 million and change, and they settle on a price of $1 million. However, we had pre-approved him 3 weeks prior to him and the seller finally coming to an agreement on the price. Well, the rate initially was somewhere in the high fours because he's a jumbo and it was an adjustable rate mortgage. It was a 5-year ARM. And when we got the contract, which again was about 2 or 3 weeks later, the rate was almost a full point higher. Now, no fault of our own. He acknowledged that. He said, Frank, nothing you can do here. We didn't come to an agreement for almost, up until today. I think they went back and forth for about 4 or 5 days and finally settled on $1 million even. So we said, look, I can't swing this. I'm within my inspection period. I qualify for it, but I'm just not comfortable. So I'm going to have to cancel. And I said to him, Tony, before we do that, I said, if I can get the seller to give you back money and we can buy the rate down to where it was initially when we spoke 3 weeks ago, would you be willing to do that? He said, well, explain that to me. I said, well, we agreed on $1 million, which means the seller's cool with $1 million. If we go to $1,015,000, I can get you back down under 5. And I think the rate was like 4.7 or 4.875, somewhere around there. He said, well, absolutely. Why wouldn't I do that? My payment goes down $337. I said, okay, perfect. So then I had to call his agent, explain that to his agent, who in turn said, I get it, but do you mind explaining it and being able to articulate that to the listing agent? Because I don't want to butcher it. I don't want to, can I curse? I don't want to fuck it up. I said, no problem. I said, I will call the listing agent. You're more than welcome to be on the phone. Okay, great. P.S. We called the listing agent and I explained to him, I said, this gentleman right now is within his inspection period. You and I both know, right, that we kind of went back and forth for almost 5 days on finally agreeing to a number. I said, we pre-approved him almost 3 weeks ago and the rate's about a point higher and he's going to cancel this contract and he's going to be able to get his money back. And he's thinking in his head, well, hold on a second. If he cancels this contract, now I got to put this house back in the market. It's at $1 million price point, $1 million price point, not an easy sell when rates are continuing to spike every single day. So he went back to his seller. He goes, give me until the end of the day and I'll get right back to you. Let me find out. It wasn't even 20 minutes. 20 minutes. He called me and said, listen, we have a deal. Because at the end of the day, he knew if the buyer could cancel and get his money back, then he's got to put that house back on the market and then run the risk of having to find a new buyer when rates just went up almost a full point in a matter of 2 weeks. So it was a no-brainer, right? Now then you ask yourself, well, what about the appraisal? Great question. It has to appraise. We got lucky here. It appraised at $1,040,000. So he actually had $25,000 in equity. That's a big one. If it doesn't appraise, then of course we kind of got to go back to the drawing board and figure out what what the seller would be willing to do. And at that point, there may not be a credit, right? But I know for me, if I'm a seller, I know in this market, if I really want to sell my home, whether it be to relocate, downsize, upgrade, I've got to bend a little bit. I've got to be a little bit flexible. Whereas 3 months ago, 4 months ago, it didn't matter. You didn't have to be, but it's a different world right now. You know what I mean? So I would say, if you don't work with me, no problem. I get it. At least get your lender involved. If your lender is not involved, then you're going to have a very difficult time trying to articulate this to a listing agent who then has to articulate that to a seller who's already pissed off that they can't sell their house. It's now worth less than it was. And they may say, you know what, just cancel the listing. I'm going to move on. So better if someone actually is speaking to that listing agent. It may even be worth getting the seller on the phone sometimes. So everyone is on the same page collectively.
Well, that's how I just posted. That's how Frank and I met. I had a listing in here in Boca.
Royal Oak Hills, I think. No,
It was like over by the hospital. And it was, you know what it was? It was my friend, Mr. Steve, who was the aftercare coordinator at Addison Meisner when my kids were there all through high school.
I think it was a 33486 zip code, if I'm not mistaken.
Uh-huh.
Yeah, I remember.
And I was the listing agent, but the buyer was a VA buyer. And it was one of your agents from Wellington, and she was fantastic. And ironically, I hadn't done VA in a while, and I think it was like 2016 or 17 or something like that. So I said to the buyer's agent, I said, I'd like to just have a conversation with the loan officer. And Frank got on the phone and kindly sent me a few bullet points to share with Steve and, to make them comfortable. And if I remember, this was a VA loan where they were actually putting money down. And that was the first for me.
Yes.
And I remember I had to go to my broker and go, how do I write this up? It was just like kind of interesting, but that's how Frank and I met, was having a conversation. Then he articulated to me and then offered to get on the phone with the seller. And with that being said, this is a great segue because Knifey has her hand up. And I know you just got your mortgage broker's license as well as being a realtor in Tampa, right?
Yeah, I did a couple of months ago, so I'm still learning the ropes.
Frank's a great person to learn
I'm
from.
still learning. I know. I love Frank. I actually have Frank on my list.
Congratulations.
As lenders. Yeah.
Oh, awesome. He's wonderful.
Yeah.
Knifey, congratulations.
Thank you. I get your texts all the time.
Awesome. Okay.
So that's a
cool.
good thing.
Yeah, Michelle, here's what I would say. Send me everyone's information that's on the call. I apologize for not having the video, being able to get that to work. But I mean, I would think that what I'd like to do is at least just send everyone the marketing material. That way you have a better understanding of what it looks like. And we can actually,
if you guys want to drop your
what a co-branded one looks like.
Drop your emails in here, guys, because I don't know if it captured it or not when you signed in.
Well, let me give my direct number. If everybody wants to text me their contact information, that would be
Thank
great.
you.
So it's 561-504-1278. And Michelle, if you want to throw that in there, that'd be great.
Done.
And then if they want to text me, I can actually connect them with my marketing team, and they'll put together a co-branded flyer with all their information on there. It's really nice. All of the agents we have use them. They're great.
Perfect. There we go. This is great. See, it's funny because, so just for perspective, the state of Florida is very large. I just did another state of Florida with yellow highlighter on it to show people where I actually work. But so Knifey's on the West Coast in Tampa, and I'm in South Florida. Eric is to the north of me, about 2 hours in Cocoa Beach. And so, and here we are, Knifey knows who Frank is. Like it's kind of it's interesting.
Yep. I'm actually taking everyone's email. Okay. So yeah, if everyone could send me a
Frank
text
with your email.
and I'll send over those co-branded flyers and I'll give you the instructions on how to get them set up. It's very simple. And then we'll go from there.
Knifey, did you have other questions though?
Yeah, about the buy down. Quick question.
Sure.
Because I'm hearing, thanks Frank for the 321 information. So on my information for buyers, I am going to put that on there so it can kind of stand out, because I'm hearing a lot of lenders speak about the 2-1 buy down. But is there a huge difference with the permanent buy down over the life of the loan? Is there a huge difference in like fees or things for that?
That's actually a great question. So
Mhm.
here's what I would say, right? There's two different ways to look at that, right? So the 321 buy down is really just a temporary, it's almost like a Band-Aid if you think about it, right? You're getting a 3% less rate, 3% less the first year, 2%, and then 1%, right? So by year 4, you're back at, let's call it 7 or 7.25%. And let's assume rates don't move, you really wouldn't have the ability to refinance unless there was a substantial drop in interest rates.
Mhm.
The permanent buy down, where someone just says, hey, look, I'll give you fake number 600, give me a credit for 10,000, and you buy it down to, let's just say, fake example, 6.25, right? Now, obviously 6.25 is higher than 4 and 5. But by year 4, you'd be at 6.25. Whereas if you did the 321, it would be a higher rate for the remainder of the loan. So the temporary buy down is great the first 2 or 3 years, but then by year 4, you're going to be higher in terms of rate than you would be had you just done a traditional buy down. You know what I mean?
Mm-hmm. Mm-hmm. Okay.
I personally think that there's no right or wrong answer. I think the 321 right now makes more sense because I do think there will be an opportunity to refinance in the next 24 to 36 months. I could be wrong. I could be. If I had a crystal ball in front of me and I knew that rates are going to jump to 8% and they're never going to go back below 7%. Well, then at that point, the traditional permanent buy down would make more sense, assuming you're going to own the home for more than, let's say, 4, 5, 6 years, if it's a long-term play. You know what I mean?
Mm-hmm.
But if you said to me, look, I'm selling this home in 5 years, well, then maybe the 321 makes sense because you're getting the lower rate for the first 3 years, and then you're just stuck with the higher rate for only 2 years, and you're selling the house anyway.
Okay.
Right. But if somebody's buying their forever home, it might make sense just to do a traditional buy down because, again, you're locked in at a specific rate for the entire 30-year term.
Okay. All righty. Thank you, Frank.
So Frank, one of the things I want to also bring up, obviously some of us are in Florida, but not everybody on the call is, but this affects all of us. Homeowners insurance.
Eek.
How hold on, I have to vomit right now.
Yeah.
If
You
you're
need
in Florida,
you need your
know.
crystal ball for that one too.
Yeah.
Florida has serious issues right now. They've had serious issues. I've been discussing this for months and months and months. Are you seeing a problem with loan approvals having an issue because the insurance now is so expensive or they can't get insurance? What are you seeing?
Well, it's probably more of a question for my transaction coordinator, Anthony, and I can definitely circle back with you on that one. But I could tell you this, years ago, if I go back, let's say 3 years, right, we would use on average, let me think about this. Let's say a $300,000 purchase, we'd probably use about 1%, maybe 1.5%.
Like 3,000 to 500
Yes.
a year.
Yeah. So
Yeah.
$500,000. So let's say a $500,000 home, we probably estimate, I would say $5,000 for the year. And believe it or not, it was coming in a lot cheaper, right? Like I know for me personally, my insurance when I bought my home was $3,900. I know now it's up to $6,000, right? So is it making it more challenging to get approvals, right? For the affordability, anytime you raise rates or anytime rates go up, I should say, over 3% in a 9-month period, and then on top of it, the cost of insurance goes up. I mean, the affordability issue is going to continue being your biggest challenge, right? There are companies out there that are still writing policies. I mean, they're very high. They're very high. I mean, we have a gentleman that's on our team. I don't know if you know Mike Reed. I mean, he last week I go in his office. Whose insurance is that? He said it's mine. He goes, it went from 4,500 to almost 8,700. I mean, it's
I reached
really
out to my insurance broker last week. I gave her some breathing room because with everything going on with Hurricane Ian, and I said, "Can you give me a heads up on what we should be expecting?" She goes, "I don't have an answer yet." She's very good. She says, as a matter of fact, a lot of the companies were not writing because of Ian. And then she said that there were some things kind of happening at the state level. So I guess we're just going to have to kind of wait and see. I'm a little scared because my original quote last year was almost close to 10,000 a year. I'd love to say that I'm in a 5,000 square foot house, but I'm not. My house is it's like 2,000 square feet with a metal roof that we put on in 2016. Like, you would think that in itself would be huge. Well, we finally got it reshopped and it's under 7. But now I'm like, oh my God, what's going to happen now? So it leads me into the other piece of having conversations with buyers, which this is how I did this with first-time home buyers, and I still do it to this day, is finding out how much my buyers are comfortable with monthly. And this is a reminder to seasoned agents along with newer agents, is that it's great that someone has a pre-approval, but if they're not comfortable with that price point on what their monthly PITI is going to be, I go back to the lender and say, can you back in? They're more comfortable at $2,700 a month all in versus $3,200 or $3,500. So I had someone recently say that her payment that she was pre-approved for 2 months ago was, XYZ, but because of the rate hikes, now it's here. We've had to lower her purchase price to accommodate what she actually is comfortable with paying every month.
Yeah, I mean, I would say, not sure if you were asking, Michele, but I would say the way our team does, the way we back into that price, right? That price range for the buyer, is always very simple. Couple of questions. Number one, how much do you have allocated for the down payment and closing costs, right? And let's say they say we've got $30,000. We just got recently married. We've got $30,000, right? And let's say, and the next question would be, okay, well, terrific. Are you currently renting or do you live with family? We're currently renting. We're paying $2,500 a month. Okay, well, terrific. In terms of your monthly payment, is there a specific number that we are aiming for? Where is your monthly payment threshold, right? If they say, well, we don't want to be anything above 28. We're renting at 25. We want to go to 28, and that's our absolute max. Well, then in our head, we know, right? $400,000 less $30,000 for down payment, which is barely 10%, but that's fine, right? We know that that's probably going to put them anywhere between $2,700 and $3,000 a month, give or take, depending on taxes and insurance, right? And if there's an association fee. But what I will say is I've had agents ask me, they've called me before, the newer ones, and listen, I love, anytime an agent wants to make our life easier, we love it. However, what ends up happening is they'll call us and say, hey, I'm showing a buyer some houses this weekend. Is there any kind of app or any kind of calculator I can use? Because they don't want to be above $2,800 a month, right? And they haven't gotten pre-approved yet, and I don't want to scare them away. It's a very difficult answer because, number one, rates are changing every day, as we know. Number two, they don't know the buyer's credit score, and the rate is based on loan to value and credit score. If they don't have 20%, the PMI is based on loan to value and credit score, so you don't know what that PMI is going to cost. So a newer agent could be showing a buyer a house for 400 because the buyer tells them they don't want to pay more than, 23 or 2,400 a month. And that buyer's got a 660 credit score and only 5% down. And the interest rate's 7.5 and the PMI is, let's say, 450 a month if it's conventional, right? And they may be showing them a house thinking that payment is going to equate to 23 or 2,400, but then when it makes its way to us, it's closer to 3,200, and they just wasted their entire afternoon. So again, I don't mind. We love it when an agent wants to make life easier for us, right? But in an effort to make life easier for themselves, and then of course, ultimately us, because once we hit them with the real payment, the buyer, they're going to, exactly, Terry. Yeah. you want to get them pre-approved up front. And then at that point, we can kind of narrow it down to number one, price range, single family townhome condo. You don't want to show them condos if they're FHA buyers. Are there condos out there FHA approved? There may be a few. It's literally probably less than 1%.
I would suggest that everybody check the list on HUD to see what condos are pre-approved.
Won't take you very long.
FHA, right? Huh? It won't take you long. No, a lot of them let their certificates expire over the years.
Correct.
And trust me when I tell you, agents put in the wrong information all the time. If you see on a condo that it's also got FHA and VA, you please, for your buyer's sake, for the listing agent's sake, please do not send any sort of contract over until you have verified that one, it is approved, like that they can go that way, and talk to your lender as well, because it's a big deal. You don't want to get your buyer excited about something that they cannot purchase.
Yeah, I will tell
you. In new litigation, if they have any kind of litigation whatsoever,
Oh, right.
Forget it.
Yep.
And it's usually someone who lives there or the HOA association that's filing the litigation.
Yes,
Yep.
exactly. And
or
then
the contractor who, takes care of all the trees and stuff and never got paid.
Hey, the other thing is too, Frank, talk about investments, like the investor percentage at a condo, because that comes into play, and especially with a smaller condo. I sold something in March of 2020 to one of Kylie's friends, and man, we were right there with the limit of how many condos were owned by one person and were, investments. So could you speak to that a little bit too?
So I don't know if there have been any changes recently. We have a condo department that I usually defer to. So what I would say is, with regards to condos, number one, definitely rec leases, unfortunately, we do not do. So like Century Village, I know there's a rec lease in there. We would not be able to do any kind of financing in Century Village. In terms of investor concentration, right? If it's more than 50% and we've got to go full review, potentially that could be a challenge. If it's a limited review, which is a higher down payment, right? Lower loan to value, the investor concentration would not really come into consideration. If one entity or one corporation owns more than 10% of the units, that potentially could be a challenge. I think Eric is asking, what is the down payment on a limited? Primary home 25, second or investment 30% down. So just something to keep in mind. I would say
that is actually so important for people that are in areas where there are a lot of second homes, investment homes, Sunbelt states, and etc., because that's a big deal. And I'm telling you, this one entity thing is a big deal. And we literally went through the property tax roll before we even did the offer, because there was this one guy and there was only like 40 units and he had like 3 of them.
Yep. I would say, I can't see that whole comment from Eric, but I would say if you have a buyer who is specifically looking for a condo, right? We've got to, I know it's challenging, but you'd almost want, number one, they definitely should get pre-approved first, right? We want to see what kind of credit score we're working with, what kind of loan to value, how much money they're putting down, right? The other challenge is, will the HOA even approve them if they don't have a specific credit score and aren't putting a specific amount of money down? I had one recently. I can't believe it. They denied a veteran, and the guy had a 643 or 647 credit score, wasn't putting any money down, but had plenty of room on his debt ratio. I mean, he made more than enough money to qualify for this particular condo, but in their bylaws, they would not allow him because of the credit score. I was blown away that they denied him. I said a lot of mean things too to myself about this particular association.
Well, that's the other thing is these associations, not all of them require a credit score, but it's like, it's insane. Terry, did you have another question? Oh, you're muted.
There you go. I was just going to talk to you a minute about the insurance thing, just because I know what happened in California because of all the fires. And, you know, flat out, it was one of the main reasons we moved, because our insurance, the insurance company sent us a letter one day and just said, by the way, we're no longer insuring properties in California. And that left everybody, because it was, I think it was State Farm even, but it left everybody panicking. And then a whole bunch of other insurance companies did the exact same thing. And it left everybody panicking because they couldn't find insurance and they had a mortgage. So you have to be insured. And we ended up having to go to a private insurer. And we also ended up having to go on what we all refer to as the state unfair plan. It was supposed to be the state fair plan. Our insurance went from $3,200 a year to over $13,000 in a matter of a month. And we had to have a separate policy for the dogs, a separate policy for the barn, a separate policy for the guest house, a separate policy for the vineyard, a separate policy for the vehicles. So really, you had to find somebody who traded in a whole bunch of different people. And they just put it out across the United States and said, you know, hey, I've got somebody who has this, will you insure it? And someone who has this, will you insure it? And it no longer was feasible to stay. It made no sense whatsoever to stay and pay that kind of money. And we backed up to the Cleveland National Forest. So the chances of us having a fire in the next few years is very high. So I think that it did become a problem for first-time home buyers. And as soon as we went under contract, we were telling them, call your insurance company right now. Oh, I've had them for years. Call them right now. So, you know, there was no more waiting until the week before closing to get your insurance.
Yeah, this is something everybody should be doing during the due diligence period, no matter where you are, is shopping insurance quotes. Because I'm telling you, and I'm going to tell every buyer's agent that I'm going to literally, I think I'm going to put in broker notes, honestly. Make sure you include shopping your due diligence on insurance quotes, because I've had some pushback and I'm like, yeah, but the due diligence period is over. Cash deal. Sorry.
Yep.
Any other questions, guys? We only have a few minutes left. And if not, that's fine. We've gone through a lot today.
And Michele, listen, like I said, if anyone has any questions, they have my number. If you want to put it in the chat board again, they can call me, text me anytime. There's always going to be, you know, some agents sometimes say, you know, I don't want to bother you. I thought this was a silly question. There's never a silly question. The buy down can become a little confusing when you're finally ready to, you know, you have a buyer and they're ready to make the offer and you're like, okay, well, now what did Frank say? I don't remember what he said. You know, get me involved, right? Get me involved. Let me at least walk you through, kind of go through the numbers with you, because we have to calculate the cost of that buy down. Because remember, when the agent makes the offer, they have to make it factoring in what the cost of that buy down is, because the buyer cannot pay that. Very important. The seller has to pay that. Even if the buyer says, Michele, I've got 30 grand here. I'm going to buy my rate down. Don't worry about it. There's some sort of calculation that does not allow them to actually pay that buy down cost. So the seller is the one that has to pay that.
Okay. Well, I think we'll leave on that note. Thanks, everybody. We meet every Monday, 10 a.m. Eastern time. It is streamed into our Facebook group, No Agent Left Behind, Real Estate Reinvention group. So please feel free to jump in, request to join the group, invite your real estate friends to join it. Twice a month, we have guests. Twice a month, we just do a round robin, talking about the market, bringing information to each other, collaboration over competition. That's what we're all about here. And if you have any suggestions on topics that you'd like us to talk about, just DM us in the group, or you can DM Eric or I, separately. Frank Christiano, thank you so much from CrossCountry Mortgage. You are always just a wealth of information and, keeping us on top of what's going on in the mortgage industry, especially during these interesting times. So I hope you all have a great week, and we'll see you next week on the Mastermind.
Thank you, Michele. You're the best. Take care.
Bye, guys.